that I never ever wore it because of the heat.
Wow.
So it does happen.
Wow.
Hey
Yes.
everyone, thanks for joining us. We'll give people just a few seconds of time to get logged in here and with us, and then we'll get going. Yeah, it was a brand new piece of clothing that I never wore because I had left it in the trunk in a suitcase, and it was like 112 that day. And I could never get it out of that square that it was folded into. It was like, well,
Wow.
I guess I won't be wearing this. Yeah. All right, everybody, thanks for joining us today. This is the last week in Mortgage Today. I'm Faith Howard Mooney, the VP of Member Engagement at the Mortgage Collaborative. And with me, I have Shawn Karnes, who is the SVP and Sales Manager at Arvest Mortgage. And we decided that he maybe, you may think that you are on the rundown instead of the last week in Mortgage Today, because he is in a car and we were playing Where is Shawn Karnes? So Shawn, thanks for doing this for us. We really appreciate you.
Yeah. Well, you know what? Since we're doing that, I'll go ahead and get out and I'll just show everyone because make it like Rob. I'm in Mount Vernon, Missouri, and I apologize that got tied up, delayed, so we're doing this call live. And here in Mount Vernon, they've got like a little statue that tells you how far it is to Brownsville, New Orleans, Houston, Dallas. So, housing's everywhere. So anyway, thanks for having me on. I have to get in because it's this triple-digit heat out here, so you don't want to pass out. Anyway,
exactly.
Thanks for having me. For those that don't know Arvest is about a $27 billion asset bank based out of Arkansas. Our 4 states are Arkansas, Oklahoma, Kansas, Missouri. We have approximately 270 branches. And we also have, we buy servicing throughout the United States. And currently it's around, I think we have around $57 billion in servicing. So, we're a well-rounded regional bank in the Midwest.
Yep. And someone that we love working with. So you joined TMC back in December of 2019. So we're rolling through the 4th year here. So appreciate you doing this. This week is like a big week. Tomorrow, the Fed meets, 25 basis point increase anticipated. I'm assuming that everybody kind of feels like that's just going to happen at this point in time based on what the news has been.
I was looking, I was talking to our head of secondary and we were kind of visiting and we were kind of going over all that. In fact, it's 3% for being 100% chance. I think it's a 97% chance tomorrow. But I did see that, based on the data that they had, it's only a 22% that we have another one in September. And a little more news, just looking at that futures, I think I saw where it's a 50% chance price that they will start cutting the rates, not until the second quarter of next year. I don't know if you saw that, Faith, but both the NBA and Fannie have kind of moved the forecast of when they thought this recession or the potential recession might happen.
And I didn't see, all I saw was after the first of the year. So I didn't see any specifics related about that. But I did see one of the things that I did see out there, which, it's like, I'm sure everybody that's in secondary thinks about, but I don't know as everybody in an organization thinks about, that there's been a lot of talk around the long and variable legs of doing an interest rate move, that no one has really been able to pinpoint like what that length of time is, in that the economy's been effective. And part of that is the economy has still done so well, even though, they've continued down the interest rate path. So I think it's pretty much inevitable. I guess we'll see tomorrow what happens.
Yeah.
What happens with that one.
Well, it is. it is funny that you say that there have been a lot of folks that have been out there predicting dates on when interest rates were going to drop, and they've all been wrong. And it's, they've been predicting it since probably October of last year.
Right.
And the state goes by, and the state goes by. It reminds me of like Y2K. We were all going to lose power, and then you know what?
Nothing
There was power
happened.
still on.
Well,
Well, I was going to say, one of the things to your point, the job numbers are still strong. I saw a report, which maybe many of our members saw, Equifax gave last week from some of their economists, just talking about the market and what they see with credit reports and stuff like that. But, in the service sector, just huge, continuing to see growth in the service sector, while other areas are, they're even or even falling below. You've still got such growth in service sectors, construction growth, which, if you really are starting to listen to economists, they're saying, well, maybe the Fed is going to be able to have a smooth landing. So I guess we'll just wait and see.
Yeah, we will see. Well, in the news this week also was, Arvest, owned by a bank, that banks outpaced non-banks in deliveries to the GSEs in the second quarter. Any surprise in that for you that would happen? That banks would be ahead of other institutions doing mortgages on the GSC side of the business? That to me wasn't shocking news.
Yeah, it's not shocking. And looking at what has happened this year, with interest rates rising so much for banks, a lot of banks would hold a lot of residential mortgages, a lot of the residential mortgages on their books. But because of liquidity issues, I think many of them are looking at selling those, and I think that's really why we saw a big, an increase in that second quarter.
Yeah. Wasn't a huge increase there, but mortgage lenders delivered 174.26 billion in loans to Fannie and Freddie in the second quarter. So delivery to Freddie and Fannie was up 37.9% in light of what's out there and who's purchasing and those types of things. Not surprising. Credit unions did really, really well in that environment. They had a spike of 2% market share, which I think in environments like this, that tends to happen with the credit unions as well. So good business going to the GSEs at this point in time for sure. One of the things that we've talked about consistently on this show lately is how do we find increases in housing supply and where are they coming from? And we've talked about crazy things. Not crazy because some of them have been done, like 3D printing of homes and some of those things. But one of the things I came across this week is the Federation of American Scientists, which seemed like an odd group to be looking at this, but maybe not so much. They're crowdsourcing ideas for national policies that could increase housing supply in the United States. And I just thought it was an interesting idea. And I'd love to hear kind of like what you have seen in the markets, or if you've seen anything in the markets that you support of people trying to find a different way for the demand in housing.
It's funny that you should say that. One of the things that I think we're starting to see an increase in is definitely manufactured homes. Just as I said, I'm here in Mount Vernon, but when you look at how rural so many areas are in our population, you can get a manufactured home, which to the standards that they're built today, especially after 2008, just amazing. And put it on a piece of land and still be relatively close to an an employment mecca, or especially working from home. But when you look at the cost of those compared to what you would buy, let's just say if you were in Tulsa or Oklahoma City or Kansas City, I mean, the cost per square footage is just unbelievable. And the amount of savings that you can get can be pretty substantial compared to buying inside the city. So I think there's lots of opportunities. There was a community outside of Oklahoma City that it's a community of small homes, the tiny homes, but they're putting it into basically into an association where everything is taken care of, almost like a little golf cart community. So I think there's a lot of creative things that are going on out there. And I think the day that people needed those huge homes in the suburbs, I think that this new generation doesn't think like that. So I think there's definitely opportunities for unique housing that some of us probably aren't used to. And I think we'll put a lot of pressure on the agencies to maybe even change what we will consider financing.
Yeah. I kind of agree with that. I think that, people that are far younger than I am they're more, they like to be more transitional and not necessarily fixed in, one location. But I call my daughter a wanderer. I think they're more wanderers that if they can be mobile, which both her and her husband can be with their jobs, they tend to like to move around a little bit and have variety in their workplace. And so I think some of those types of housing situations, well, anybody that knows me knows that my shoes wouldn't even fit in a tiny home, that that other people don't see things in that same way. I think that the article I read, one of the things that was most interesting about it is they're looking for ideas that take you out of you can't do that because this is what the agencies do right now. So you can't do that because you can't finance it. And the whole article was kind of about federal and state regulations that make everybody, especially the people in this industry, right, think about, well, that's a great idea, but it's never going to fly because of, this, that, or the other.
And that a perfect example of that is when we talk about manufactured homes, hate to say it, but a lot of people have a perception and they think of the trailer parks back in the 1970s. But for those members of us or whatever, if you go to Florida and you see some of these really nice manufactured home communities that have like an attached garage, which is hard to believe, pitched roofing, sidewalks, and they're developed, that kind of zoning ordinance needs to be across the country, because you've had cities that have come in and saying, no, we will not allow manufactured housing inside of our city. And then you had those suburbs that have kind of taken that on. So it's not just a national, but I really do believe what that article is saying. A lot of it has to do, not even state, but local jurisdictions and them allowing some changes, because there's just the mentality out there of, well, we can't have that kind of housing in my backyard. The problem is they don't know what that housing is today, because technology has come so much farther than it used to be.
Yeah, I totally agree with that. I think I live in one of those communities that has been that way until very recently. But to be honest with you, unless you are in our industry, I think when some of those developments do go up, people from the outside of our industry don't even know that it's manufactured housing once it's done.
Completely agree with you. And I will tell you, I've done a lot of research on this, just manufactured homes, because as a bank, we've kind of changed our policy and looking at this as an opportunity. So we've created some in-house lending and some different things like that. And of course, the agencies have really changed now. They've increased, the LTVs, even looking at FHA on a manufactured home, there's possibilities. But I think it's just, people just don't realize that some of these houses are built to a higher quality than some of our, stick-built houses done by builders today. And a lot of them, many of them have 10-year plus warranties on them, some in certain cases lifetime warranties. So there's a lot there. Also in that article, it talked about using different types of construction. I'm seeing this, whether it's metal house or you hear about barn dominiums or different things like that. There's a lot of unique things or a lot of unique housing out there that are meeting the demands. And I think that's where the agency has to catch up.
Yeah. Agreed. So this article, so they're looking for submissions. So if anybody has any ideas, it's the Federation of American Scientists. And they are looking for people that can think outside the box and not, if you have ideas about housing, even if they're kind of maybe a little bit out there, or things that can't be financed currently, they are looking to dig into those ideas. There is a deadline of August 12th for submission of ideas, but do look up the Federation of American Scientists if you're interested in participating in that. I'm sure they'd love to hear from some people. Servicing is growing in certain places. Ginny picked up the biggest gain in single family outstanding, up 2.2% in the second quarter. So single family servicing definitely on the rise. And within that rise, in this situation, non-banks growing share of that business. Why do you think that's happening on the non-bank side?
I'm going to throw this out there, and there's hopefully nobody throws any tomatoes, but they're going to be thrown at their own computer screen.
Comments in the chat, and we want them to do that. So if you have comments, please share.
I think traditionally banks have not done a good job with FHA. And I think FHA, Ginnie Mae, basically has, FHA, they reduced the amount of the MIP, upfront MIP. A lot of folks, if you really get in there and look at it, for those really first-time home buyers, maybe lower credit scores, if you look at an FHA loan compared to a conventional loan, the MI cost sometimes can be just that cost per month. That payment can be a whole lot more than a traditional FHA loan. So I think that's why, and I think in this environment, I think banks, even us, I'm having to retrain, let our staff know, make sure that we let partners know, whether it's your builders and realtors to know. But it is interesting. I pull market data, and in a lot of market data that you see, Rocket Mortgage, that is one area that they do really well in, is FHA nationwide. And everybody kind of scratches their head. But part of that is they get into a lot of the rural markets. I will see in some of these markets that maybe don't have a lot of banks, and let's just say rural Missouri, where I'm at now, all of a sudden here's Rocket Mortgage. So they are providing that financing. Now that tells me there's a lot of opportunity still out there for our members and the sales force that we have. There's lots of opportunities because for most of us, we're the boots on the ground. We're the ones connecting with folks, and I think that government lending is going to continue to grow stronger, not just with FHA, but USDA, rural development loans, for a lot of states, Minnesota, Oklahoma, Kansas, Alaska, Hawaii, Native American 184 loans are continuing to pick up. They've eased their guidelines also. So I think this is something that we could see continuing to grow. Again, as we continue to see some of these adjustments that Fannie and Freddie are making, especially if some of those, I know we'll save that maybe for the very end, but if they do impose some of those LLPA adjusters.
Exactly. I agree with you on that. I think that it is going to continue to grow. And I think the focus of the agencies right now, based on when we were in DC, is doing some things, possibly, guidelines loosening maybe or being changed to get more people into housing may help kind of push that even further. Thank you, Emma. Emma posted in the comments here, Shawn, that you probably can't see, that she just looked it up and it says the deadline for ideas related to housing is now September 8th. So you guys got some extra time if you want to participate in that. Appreciate that a lot, Emma. One of the things that came out this week, which I'm always interested, I do like to listen to what the Urban Institute has to say, because I always think that they have fresh ideas. And, maybe that's my perspective. If somebody has a different one, please share. But they have called for an end to lender DPA ban on FHA loans. So currently only government entities can grant DPA to FHA borrowers, but and it's been that way since 2008. So they are looking, I would love to hear comments on this from people who are listening in. If you think that that is a great idea to be able to help expand your business models. So Shawn, what do you think of that one?
Well, so I was doing loans prior to 2008, and so this is interesting because of the down payment assistance. That got a lot of ridicule and was said for the run up, that we had in real estate. There were a lot of, basically the seller was paying for the down payment, and so we had customers. They were saying it was overly inflating the housing market at the time, and that you had buyers that were getting into homes that the seller was helping them get into the homes that were really over 100%. But at that time also, I think we had, we had a lot of things going on in the market. We didn't have the appraisal standards that we have today. So I don't know what to think. I saw that article and I thought about it because my first thought was, well, we can't do that. But there were a lot of things that went wrong that led up to 2008. And it had to do with a lot of, basically straight to close. So people remember if you could state whatever your income is and it would go, we called them ninja loans but anyway, no income, no asset, no docs. We had loose appraisal standards back then. We were able to choose the appraisers as lenders or banks. You could choose your own panel. It didn't have to go through the standards that we have. So I would be interested to hear from the audience, because at first I thought, no way. But then I started thinking, well, we have all these policies in place to understand what the value of the house is. We know that the greatest obstacle and barrier is down payment right now for first-time home buyers. So I would be open knowing the regulations and rules that we have in place today.
I think that, that some of this stems so we have a number of people within the TMC family who are implementing special purpose credit programs. And I think, the focus was, obviously underserved borrowers who want to become homeowners. And DPA is kind of like an important part of that equation because of lack of funding. That I think that, the drive towards some of those special purpose credit programs, it makes me wonder if that's kind of what is, behind this and kind of driving this and maybe showcasing it a little bit at this point. It will be interesting to see what happens.
I think that there's a way to do it. I think, trying to stay away from the seller puts a donation into this and then that money goes back to the buyer are the things that we probably need to stay away from. But I do think that there's a lot of non-government agencies, and I don't know, we've helped folks to become government agencies for down payment. That's not an easy process to basically be accredited by them to put down payment assistance.
Yep, agree. So we're going to talk a little bit. We're only like 5 minutes away from the end of our call today, but we're going to talk a little bit about the 115 degrees that you're in currently, and kind of like what's happening across the United States related to like climate change and weather. So we've seen in the news in the last, I don't know, month or so with Allstate, State Farm, AAA, all kind of backing out of certain markets. It is determined that July is going to be the hottest month on earth on record. And I know we had talked before we hopped on here, you're feeling that today where you're at. We're feeling it in Minnesota.
Yes.
We're going to have 5 days in a row over 90, which is unusual for us. I mean, what do you think happens, in those environments where people are no longer able to obtain insurance because traditionally, no insurance has typically meant no mortgage, no insurance, no mortgage. Do you think that will stay in, kind of that space, or do you think with everything that's going on, natural disaster wise and everything, you see that situation changing?
Well, this is a hot topic, especially for those that are servicers. People don't understand they're getting their insurance premiums, and now their payments have jumped up $200, $300, $400 a month because of their insurance premiums have gone up so much. True life story. We had an individual in Florida. They were looking to refinance their house. I know it's hard to believe there's a refinance today, but anyway, they were looking at refinancing their house. Basically, it was a cash out. They didn't owe any money on it. They let their insurance lapse. They thought they paid it. They let it lapse. And there was a clause in their insurance that if you let it lapse, they automatically can increase it 25%, which this company did, which took this person out from being able to qualify, not to qualify for this
Right.
loan. But you look at California, you look at Florida, and a lot of other states. I think Oklahoma pays the highest amount per square footage for homeowners insurance. This is something it does not seem to be catching the attention of, I think, our congressman or our legislature, because I think this is a big problem, and it's either something's got to give, or unfortunately, I think they're going to end up nationalizing insurance, because you have to have it. At the end of the day, the federal government is the one that's going to be ending up spending that for these disasters that happen. So, if things keep going down this path, I think we're going to see like a nationalization of our insurance, and we'll all be paying into a national fund, which I'll be honest, I don't want to do, because, I know that with my insurance company, I can call them and they will cut a check and work with the servicer. I could imagine what the bureaucracy would be like if they did nationalize
Right.
homeowners insurance. But that's just my opinion.
Yeah. It is going to be interesting to kind of watch this one play out, because if they nationalize it as well, then do people, in like the places where natural disasters typically don't happen, are they funding that for the people that, continually rebuild in the beautiful coastal areas that have sunshine every day? Are we then responsible for that? So I think it will be interesting to kind of see. I do also kind of look at this from the angle that I know that places within the mortgage industry are looking at the effect of these on financing, and having a mortgage outstanding on a house that no longer exists. That I do think that the qualification process on this, it'll lead us into the very last thing that we're going to talk about. It does. Do people have to qualify, and there's an LLPA or something like that associated with houses in certain markets, so that they know that they're covered from that perspective. So it definitely will be interesting to sit back and kind of watch and see what happens as further things happen related to weather and climate.
And both Fannie and Freddie are doing studies. In fact, the Federal Housing Association has done studies of those higher risk houses in areas, and they've kind of created a heat map. I think you can find that on Fannie Mae's website, where it talks about climate change and how they're rezoning areas. And, you know, here's the other thing. That's one of the thoughts. You know, the mortgage that you had, you know, let's say somebody was in a mortgage 5-10 years ago, it wasn't in a floodplain, especially in these coastal areas. Now these houses are in a floodplain. You know, before on that previous loan, you weren't required flood insurance, but now you go back out and you're going to find out you have to have flood insurance, or you go to refinance and you'll have to have flood insurance. So there's a lot to this topic, and it's definitely going to be a lot. We're going to have a lot of discussion for many years over this.
Yeah, I think so too. Last thing, because we're right at the bottom of the hour, that I will just mention that came up this week, that there is a Senate bill out there to overturn FHFA's LLPA rule. We've talked about LLPAs forever, but it is a Republican from Indiana, Mike Braun, and Roger Marshall, a Republican from Kansas, have introduced the Middle Class Borrower Protection Act. So watch out for that one when you're out there looking at things, and we'll see where that progresses to. So thank you everybody for joining us today. Really appreciate you doing that. We'll be back here next week at the same time. Shawn, I appreciate you including us in your travels. I don't think that we could
thank you, guys.
replace you and the great commentary that you always provide. So appreciate you much.
All right. Thank you, guys.
Thank you, everyone.